Hey guys, Whitney here. Thanks for joining me on this New Year's Eve. All right. If you would, before we get started, I'm expecting a few more people to show up here. Somebody pop over to the chat box and just let me know that you can hear and see my screen. That'd be fantastic. All right. We've got some recurring faces, new faces. Whoops, hold on. Coming in loud and clear. Thank you so much, Paul. Thank you. Let's see here. Okay. Well, I got 11:01 my time. Let's go ahead and get started. I'm going to keep an eye on the chat box. People are rolling in. That's totally fine. So this is another episode in our How to Get Started in a Passive Investor series. I see a bunch of people that are regulars in here. Happy New Year to everybody early. I see several new faces here, so welcome. So this series is really designed to help you close the gaps and get comfortable with passive investing. And so today we're going to cover, what the differences are between an accredited and sophisticated investor. We're going to learn the recent changes to the SEC definition for accredited investor. And then we're going to understand how these changes affect your ability to invest in different opportunities. But again, as I said, whoops, if you would, please make sure to mute yourself because we got several people on the call. All right. So again, this series is designed for you if you've tried to invest in syndications before, but maybe you got cold feet, or maybe you invested in a syndication before and you're like, oh, wow, I made a mistake. Or maybe you just feel overwhelmed by all the information out there and you just don't even know where to get started. If any of these situations apply to you, or if you just want to boost up your knowledge, you're in the right place. And so several of you guys, I've actually had the pleasure of meeting on the phone. Happy New Year again to everybody. But if not, this is me and my crazy crew. I started investing in 2002 doing live-in flipping and house hacking. And these people, my husband and my daughter, this is the reason why we invest in real estate. This was just off our most recent trip. We spent a month out in Arizona, driving around, camping, safely, social distancing, and seeing friends. But more importantly, just enjoying the warm weather and the sunshine. So it was such an amazing time. We were able to do our work from the road. Our daughter's been able to homeschool from the road, so we took full advantage of this. This is actually us standing on the very top of Bell Rock, so in Sedona, if you guys don't know where that is. But this is why I invested in real estate, is to be able to do things like this. Going back to my story in 2002, started live-in flipping and house hacking, and was able to build up considerable buckets of money, but I realized I didn't have any cash flow. And then when my husband and I got together, he joined me in my flipping frenzy, I guess I should say. And then we quickly realized that we needed to transition to a buy and hold strategy. And we scaled a single family rental portfolio up to 30 units, utilizing the BRRRR method. It was all fine and dandy until I wanted to stay home with our daughter. And then my husband goes, hey, I want that too. I want to stay home as well. And we're like, man, we have got to find a far more leveraged way of investing in real estate that actually gives us our time back. So fast forward here, about 2.5 years later with Goodegg Investments, we've acquired over 26 properties, 6,700 multifamily units, and have a $800 million portfolio value. But what I get to do on a day-to-day basis is work with you guys. We have over 760 verified investors in a high repeat investing rate of over 40%, which is super high for the industry standard. So this is what I get to do on a day-to-day basis, is work with you guys. And I'm going to have to update the slide starting next week, but this is just what what we've been able to accomplish in the past year. We've put out our Goodegg Investing book. We've launched our podcast. We actually had the opportunity to, early in the year, attend several events, and we got to meet you guys, our investors. We got to sit down with all of our operators. that we work with, and then also visit many of our buildings. All right, so quick recap. If you guys haven't been in live on one of these sessions before, I just want to let you know that we have tackled a lot of information in these sessions. And what I will do is I'm actually recording this session today. I will send you a recap email, but I'll also send you links to these other, some of the other more popular sessions I've done through the Goodegg Live Masterclass that tackle some of these topics. And, you know, my aim here is to help close the gaps in your investing knowledge for syndications, understand the biggest myths that trip investors up and keep them sidelined from investing in syndications. But more importantly, at the end of today's session, once we've gone through our material, I'm going to open up the floor to kind of an ask me anything type scenario. So make sure you hang on to the very end. All right. So what we're going to tackle today is the accredited investor. Okay, we're actually going to tackle the sophisticated investor too, but most of the information that we are going to be covering is the changes to that accredited definition with the SEC. What it is, why it's important, how it impacts your ability to invest. So as we go through today's material, I want you to find your chat box. Don't hold on to your questions. Go into the chat box, type it out, and I will do my best to answer questions in line. And then if we need to, we'll clean up all questions at the end. So, but before we get started, just want to let you know that this is for educational purposes only. If we tackle any questions related to taxes or financial or you know, finances or legal situations, you know, make sure you're working with your professional on these questions because there's only so much I can answer here, but I'm happy to give you as much knowledge as I can possibly impart to you. All right, with that, I think we've got a quorum now. I think we got most people here that I was expecting, which is a wonderfully huge list for the New Year's Eve. But so let's talk about what up until November, what were the definitions for the sophisticated investor and accredited investor? All right, because really those are the two camps. All right, so when somebody is going to invest in a syndication deal or a private equity deal, they fall in these two camps. So a sophisticated investor, we here at Goodegg define it as somebody who has sufficient capital. Well, actually, I should say the SEC actually only defines the sophisticated investor as somebody who has sufficient capital, sufficient net worth, and sufficient experience to weigh the risk and merits. That's it. There's no other parameters that they really give. Okay, so we actually had to, you know, put in kind of our own parameters around this. And these are best practices that are industry-wide best practices. So it's not like we are pulling numbers out of thin air. So when we look at a sophisticated investor, we're looking for an investor that has sufficient capital, that is, you know, making $100,000 or more annually individually, or $200,000 more jointly with a spouse. The sufficient net worth, we're also looking at them to have $350,000 or more in assets outside their primary residence. Okay, these are either or. It's not that you have to have both, but either or. But the one that you have to have in combination with both the income and net worth test is sufficient experience to weigh the risk and merits. So that's why you and I have to hop on a call together for you to have, if you're a sophisticated investor, for you to have access to any deals, or if you want access to our 506B deals, we have to jump on a call. All right, so that's why, is because I have to get on a call and I have to kind of like work through the conversation, understand your investing goals, you know, capital requirements, net worth requirements, and then also your experience requirements. All right, now, when we move over to the accredited investor, it's different, right? The SEC actually gives us a hard and fast definition of what an accredited investor is. So up until just a couple months ago, the accredited investor was somebody who only had to pass an income test and a net worth test. So the income test was simply $200,000 or more, or individually, or $300,000 jointly with a spouse. Now that is going backwards for the last 2 years. You would have to document the $200,000, your income for the last 2 years, and reasonable expectations going forward. Or you would pass what we call a net worth test, meaning you have $1 million in assets held outside of the primary residence. Okay, those were the two definitions that we had. Okay, now if you notice here on the accredited side, and this is something that always tickles me pink, is that technically the SEC is saying that this accredited investor, as long as they meet the income and net worth test, doesn't have to have sufficient experience to weigh the risk and merits of the investment. Okay, we at Goodegg, we definitely hop on the call with all of our investors, and we want to actually understand and make sure, you know, for your sake and for ours, that you can evaluate the asset. All right, but we had some changes, but they were only to the accredited investor piece. So I put our standard, back in November, our accredited investor definition here, the income test and net worth test. Now we added, there were several changes, but the ones that actually impact you as our investor is that the SEC actually opened up the definition of an accredited investor to include more people. So this is pretty cool. So remember here, our income test was $200,000 individually or $300,000 jointly. And now this jointly is with a spouse. Okay, you had to be married in the eyes of the law. Okay, so you had to, that was with the spouse. Now with the expanded definition, it can include spousal equivalents. So they can actually meet this income joint test together. A spousal equivalent can. So it can be like a domestic partner, you know, whatever is considered a spousal equivalent in your state. So that's pretty cool. So that opens it up to more people. Also, the SEC changes allowed people that held a licensure, an investment licensure, to invest as well, right? So like a Series 7, a Series 65, or a Series 82. Now, I understand, I'm going to try to like bring this down to very basic levels. A Series 7 is somebody who can sell basic securities outside of commodities and stuff like that, and private equity. A Series 65 is an investment advisor licensure, and then a Series 82, that is somebody who can actually do private equity type sales. Okay, so that's just, you know, I'm sure these definitions of those licensures are far more intricate than that, but from a very high level, that's what we're looking at. So essentially, if somebody is able to sell securities and evaluate the investment, the SEC is actually allowing them to now invest in accredited deals, which is super awesome. Okay. Or the last piece is that they actually are a knowledgeable employee of a private fund that is investing into the deal. So we call this a fund-to-fund structures. So if somebody was putting together an accredited fund and they were an employee of that fund, and that fund came in and invested in one of our syndication deals, the employee of the fund could then, because of they have sufficient knowledge of the deal and have evaluated the deal, they could invest in the deal. So that's awesome. Now, why do you need to know this? How does this impact you? Well, for starters, remember our previous definition, like you had to, those are pretty strict income and net worth tests, okay? And if you didn't meet those income and net worth tests, you could invest only in a 506B deal. But what if it was a 506B deal that was accredited only, okay? Or if it was a 506C deal, then you couldn't invest, right? Now, these changes actually allow more people. So if you fall in what we call a spousal equivalent scenario for income, and for net worth, you can now pool your finances together in order to meet that accredited definition. Maybe you actually hold a licensure as a Series 7, 65, or 82 license. You can now invest in a 506C deal. So that gives you access to far more deal flow. Or if you are, and this is probably it's not a situation I run into often, but if you're a knowledgeable employee of a private fund that is investing in that deal, and you work for the fund, then you can actually invest in the deal. So that's awesome too. So again, it gives you more breadth of definitions, allowing people access to more private equity investments. All right. So again, I just wanted to make sure that you guys were aware of these changes. how they could impact you, you know, if you were in a spousal equivalent situation or you had a licensure situation, or maybe you just didn't actually know what the accredited investor test, how that worked out. Then, you know, here, these accredited investor income and net worth tests still hold true today. But anyways, I want to hop on over here. I just want to make sure, what questions do you guys have? Go to the chat box and let me know. And while you guys are typing in your questions, I'm going to take an opportunity to let you know, share with you the Goodegg Investor Club. So you can go to goodegginvestments.com/invest. It's like a 6-question survey or application right there. We will walk you through, we will help you determine which camp you fall in, whether you're a sophisticated investor or accredited investor. And then we'll walk you through that process. So you can go here and apply. The club is for anybody that's just starting out in syndication investing, doing this on the side, or haven't done a deal yet. Or maybe you're a pro, you're doing this full time, you've done several deals. The club is for you. And guys, if you want access to our 506B deal flow, you have to apply through the club, and you and I have to jump on a call. Remember? In the eyes of the SEC, I have to weigh whether somebody has a sufficient experience to weigh the risk and rewards of a deal. And this, because there'll be sophisticated investors in the deal, I have to jump on a call for all those 506B deals. So make sure you go over there. And even if you just only invest in 506C deals, I want to get to know you too. I want to understand who you are, your investing goals, and obviously I would want to, you know who we are too. All right. Well, this is what the information I wanted to cover today. I wanted to leave a lot of time open for you guys to give me feedback on what other topics you'd like to see covered, as well as if you got any ask me anything type questions for the end of the year, right? We're coming up on the close of 2020, getting set for 2021. What are you guys looking forward to for the next year, and how can I help you with your investing? That would be fantastic, way for us to spend the rest of the half hour here. And if you need a drop, I totally understand it. Here is my contact information. If you need to get a hold of me, I would love to hop on that call with you after you apply to the Goodegg Investor Club, and we can get you going in our deal flow. All right. Well, you guys jump over the chat box, drop in your questions, and let's get going. All right. Nobody has any questions right now? Totally fine. We can cut out a little bit early today, and we'll start our series again next week. You guys have a wonderful new year. I'll hang out for a couple more minutes in case people are typing. And it was so wonderful getting to hang out with you today, and you investing in yourself and sharing your most precious resource with me today, which is your time.